You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today's Monday, 12th day of May, 2025. Wow, what a Sunday night we had. Man, it was one of the wildest I think I recall since I started trading futures in 2005. Yeah, when we get to the charts, you'll see what I'm talking about. It was what they call, I believe the technical term is a real humdinger. Yeah, okay. All right, thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go here to mytradingiq.com. And at the top of the page, there's a big purple button. You can't miss it. Click it, fill out the form, submit it. We'll get your indicators up and running today, and you'll be in the live training room with us tomorrow morning. Now, keep in mind when you take the trial, there's no credit card required, and you not only have access to the live training room, but you've got access to everything. We treat you just like you were a full-fledged passport holder for 5 consecutive trading days. And there's no credit card required because we want you to focus on what's being taught. We want you to learn. We want you to understand. So that at the end of the 5-day trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. That means everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com and this time scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but maybe you still want to join live. And some days you'll be busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips, and it lets you know we've been around a minute. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So let us dive into our daily devotional. The topic we're on is after the cross. We did Easter, we did Holy Week. Now we're spending a couple weeks on what happened after the cross. Today's scripture is Luke 2, verses 25 through 32. And I'm going to share it with you from the Message translation. In Jerusalem at the time, there was a man, Simeon by name, a good man, a man who lived in the prayerful expectancy of help for Israel. And the Holy Spirit was on him. The Holy Spirit had shown him that he would see the Messiah of God before he died. Led by the Spirit, he entered the temple. As the parents of the child Jesus brought him in to carry out the rituals of the law, Simeon took him into his arms and blessed God. God, you can now release your servant. Release me in peace as you promised. With my own eyes I've seen your salvation. It's now out in the open for everyone to see. A God-revealing light to the non-Jewish nations, and of glory for your people, Israel. Again, that was Luke 2, verses 25 through 32. Now, Simeon was waiting on the Messiah. Scripture says that he was righteous and devout in the King James, and that it had been revealed to him by the Holy Spirit that he wouldn't die before he saw Jesus. Chances are, Simeon spent lots of time with God. That's often how you hear from the Spirit. And he heard the Spirit so clearly that he directed him to the temple courts. The Spirit told Simeon to wait for the Messiah. And then the Spirit told Simeon to go to the temple at the exact right time. Simeon's life was directed by the Spirit. Scripture says the Holy Spirit was on him. As a follower of Jesus, the Spirit is on you too. But unlike Simeon, the Spirit is in you. Before Jesus' death and resurrection, the Spirit could not live inside us. That means that you are not going through life alone. You can get moment-by-moment directions from the Spirit of God. Heavenly directions. You've got an inkling, a gut speaking. Listen to it. That might not be you talking. You are not on the adventure of life anymore. Let's pray. Heavenly Father, just as Simeon waited with hope and saw your salvation in Christ, help us to wait with trust and recognize Jesus in our midst. You've prepared a light for all people, a glory for your people Israel. Let that light guide our hearts and bring peace to our lives. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Monday. Let me give you the numbers from around the world. Strap in because, as I mentioned, it's a humdinger. Currently the Dow up 901 points. Yeah, I'm gonna refresh this. You deserve the latest and best data. So here it comes. The Dow's up 901 points. That's a little over 2%. The NASDAQ is up 641 points. That's over 3.5%. S&P 500 is up 146 points. That's over 2.5%. And the Russell 2000, our man in the street, is up 55 points. That's over 2.75%. See what I mean? In the commodity basket, crude oil up $1.27, trading 62.29 last. That's a gain of a little over 2%. Gold, on the other hand, is down $102.20, trading 32.4170 last. That's a drop of over 3%. Silver down 19 cents, trading 32.72 last. In the Asian markets at the close, the Nikkei posted a gain of 140 points. Shanghai rose 27. The Hang Seng gained 681. That's 3%. And in the European markets at the close, FTSE up 50, the DAX up 52, and the CAC up 106. That's almost 1.5%. So we had a green day in Asia. It was a green day for the UK. And so far, it is a big green Radio Monday here in the US of A. Now, you heard it here first. I suspect we're going to see a big turnaround Tuesday tomorrow. And as we get to the charts, I'll explain to you exactly why I think that. Okay? All right. So, moving on to the news. Let's see what we got. India and Pakistan agreed to a U.S. brokered ceasefire on Saturday. Despite violations yesterday, the ceasefire remains in effect as of this writing, alleviating some of the worst hostilities between the two countries in roughly 50 years. The ceasefire ended 4 days of air fighting in which India is believed to have lost at least 2 of its most advanced fighter jets. Pakistan lost control of its airspace and dozens of people were killed in gunfire and airstrikes. The exact toll could not be immediately determined. India and Pakistan have disputed each other's accounts. The air battle, which began May 7th, is believed to have been among the largest dogfights since World War II. And here's a fun one. Chimps got rhythm. A new study revealed that chimpanzees drum with rhythm when they bang on tree trunks and share similarities with humans in their ability to hold a beat. The discovery, in one of the closest relatives to modern humans, sheds light on the evolutionary building blocks of music. The behavior is believed to be a form of long-distance communication and suggests that the chimps employ different sequences depending upon the social situation. Researchers who analyzed 11 communities of chimps across 6 populations and 2 subspecies found groups from separate regions of Africa produced different rhythms for the same context, suggesting the mammals independently developed their own methods of communication. The study also hints at a long-standing anthropological question. Despite being a common human experience, how and why humans produce music remains unclear. Now, this study comes on the heels of a separate observation of an individual California seal named Ronan that can keep time via rhythmic beats. What do you know? Eurovision's song contest begins tomorrow in Basel, Switzerland. For the first time, the country is hosting since 1989. 1 year after Celine Dion's win for the country, the competition is the world's largest annual televised music event, reaching an audience of roughly 160 million people. 37 acts are slated to perform, with several from beyond the European Union, such as Australia, Israel, and Ukraine. I guess they don't want to let us play. That's okay. All right, so why are the markets on such fire? 2 days of high-stakes talk between the U.S. and China have led to a 90-day pause on tariffs, with duties set to drop by 115 percentage points on both sides by Wednesday, and with President Donald Trump and Chinese President Xi now likely to talk in the coming days. Yesterday, we achieved a total reset with China, the president said this morning at the White House, while also announcing his plans to talk with President Xi soon, maybe at the end of the week. The move will drop American tariffs on Chinese goods, which currently run as high as 145% to 30%, and slash China's retaliatory duties from 125% to 10%. It marked a dramatic pause in a trade war between the two nations that had been the equivalent of an embargo, with a steep drop in trading activity between the two nations. We had big shipping vessels traveling back and forth, only half full. Treasury Secretary Scott Bessent said neither side wants a decoupling, and he thinks the talks have yielded substantial progress. It also gave the markets what they wanted most: de-escalation. U.S. futures markets surged higher overnight, and when London opened at 3 a.m. Eastern, we had, I think it was a 100-point candle in 30 minutes. I'll show it to you when we get to the charts. Next, Amazon and Tesla led the Magnificent Seven big tech stock surge late this morning after the U.S. and China announced a temporary trade war truce. Now, again, let me emphasize, this is a temporary trade war truce. The deal ain't done, okay? Amazon shares surged 7.2%, while Tesla jumped 6.8%. Meanwhile, Apple rose 5.2%, Meta spiked 6.6%, and Nvidia gained 4.3%. And for the most part, they're holding on to those gains so far. Google and Microsoft stocks rose more modestly, gaining 2.7% and less than 1%, respectively. And users of Fidelity's trading platforms encountered a series of glitches that stopped them from logging onto their accounts just as U.S. stock markets opened for trading this morning at 9:30 a.m. Eastern. The glitches occurred even as major share price indexes soared on news of this breakthrough U.S.-China deal. Now see, that's the beauty of futures. We were able to trade the futures overnight. But stock traders had to wait for 9:30 a.m. Eastern this morning here in the US of A. Now, obviously, the European traders, the stock traders there, who trade basically the same stocks that we trade, they had the first shot, okay, at 3 a.m. Eastern. Wall Street traders had to wait till 9:30. The Standard & Poor's 500 index was up more than 2.5% by 10:30 a.m. Eastern. We already covered that. Can you imagine being a Fidelity client and their website crashed from the traffic? Nobody could get in to place a trade. Hate it when that happens. All right. Now, this U.S.-China trade deal optimism offers important investing reminders. Stay level-headed and remember basic investing principles as markets enthusiastically cheer a trade truce between the U.S. and China. But like I said, it's not a done deal. eToro Global Markets analyst Lael Aikoner said this morning on a Yahoo podcast, "What I would like to say is be selective, mindful of the fact that this trade policy uncertainty will still linger for some time, and therefore look for companies that are quite insulated from these pressures." Prior to joining eToro in January, Aikoner spent 12 plus years in various financial management positions at asset managers such as BNY and Newton Investment Management. At least for today, investors may have trouble leaning into diversification. I'm calling it a head fake. I'm calling it a bull trap. We'll see. I've been wrong before. Lord knows. Economist Burton McKeel might have called the stock market a random walk. Now, some of you may not have been around CFRN long enough to know the man who wrote the book, A Random Walk Down Wall Street, one of the most popular books ever in the world of trading. We interviewed him twice on this very broadcast, quite a few years ago. But if you Google it, you can find it. Last week, BMW reiterated its... Let me finish what Burton said. But investors could at least use earnings guidance by companies as road signs. Right now, they are largely walking blind. Now, Burton admitted when he was on our show on this broadcast that his thoughts since he originally wrote that book, A Random Walk Down Wall Street, he wasn't quite as sold on that concept as he was when he wrote the book. So maybe you can time the markets. Last week, BMW reiterated its 2025 financial guidance from mid-March, but included the assumption that the Trump administration would roll back some of the more recent tariff increases starting in July. Why couldn't Jerome have thought that way? We could have had a rate cut last week. Oh no. Though it will take a while, free trade across the U.S., Mexico, and Canada will be restituted once again according to the BMW chairman, the disadvantages are far too big for everybody. Given that the U.S. and China agreed today to suspend most tariffs. Now, I got to emphasize that word. I'm doing air quotes. Suspend. Not end, not do away with, not deciding it was a bad idea. Suspend, which leaves you in suspense. See what I did there? Following the announcement of a deal with the UK last week, there may be some ground for Zipsy's optimism, but equity analysts at Deutsche Bank weren't as certain following the earnings report. Obviously, they wrote to clients, not everyone shares BMW's optimism. Do you? From Reuters, rare earth export permits for U.S. customers are likely to have an easier time getting approval from Beijing after today's trade war truce. It's not really a truce. However, a complete removal of the restrictions is unlikely, according to two sources in the industry in China. China added 7 rare earths and related items to a control list in April as part of its retaliation against U.S. tariffs. The decision means exporters need to apply for licenses before selling outside of China. While the decision applied to all countries, the likelihood of U.S. customers receiving export licenses during the trade war looked unlikely. Elon Musk said last month Tesla was in talks with Beijing over licenses for its Optimus robots. The truce announced today could see the Ministry of Commerce expedite approvals, which in theory take 45 days, and even grant licenses for U.S. customers soon, according to two sources in the industry who were granted anonymity given the sensitivity of rare earths in China. And last but not least, from Bloomberg, U.S. House Republicans plan to help pay for an extension of President Donald Trump's massive tax cuts by clawing back unused funds from scores of programs and grants in his predecessor's signature climate law. Billions of dollars allocated under former President Joe Biden's Inflation Reduction Act. Highest inflation in 40 years, and they call it the Inflation Reduction Act, would be rescinded under a portion of Trump's sweeping tax package released by a key House committee yesterday on a Sunday. Congress working on a Sunday? Wow. That includes funds channeled to the Energy Department's $400 billion Green Bank loan program and to industrial facilities to help lower their greenhouse gas emissions, according to a GOP summary of the House Energy and Commerce Committee's portion of the bill. The legislation would reverse the most reckless parts of the engorged climate spending in the misnamed Inflation Reduction Act, returning $6.5 billion in unspent funds. We can actually spend that money on something that makes sense, common sense. The Republican plan also calls for revoking unused funds from more than a dozen divisions within the Energy Department. The Office of Minority Economic Impact, which helps minorities compete for agency grants and contracts, would see nearly $2.8 billion pulled, while the Office of Energy Efficiency and Renewable Energy, which has funded technological research and projects like plug-in electric trucks, would lose $402 million. Unspent EPA grants for electric trucks, environmental justice, reducing air pollution at schools, and other programs would also be rescinded. The bill, which is almost certain to be changed by the Senate if it passes the House, would also repeal auto pollution and fuel economy standards, which were finalized by the Biden administration last year, and delay by 10 years the collection of a fee on methane emissions from oil and gas producers. The legislation would also include $2 billion to help shore up the nation's depleted strategic petroleum reserve. You'll remember during the Biden administration, he sold off our strategic petroleum reserve. What was he thinking? Well, we all know he wasn't. That sums it up, right? The proposal, of course, was met with alarm from climate groups like Evergreen Action, which said the plan would make deep cuts to vital clean energy and pollution-fighting programs. You know, these same guys, they want to suck the hind teat of China, and China is one of the worst with their emissions and pollution, and there's just this whole dark cloud over China. That's how you say it, right? China. All right, let's look at the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver. We're currently in week 354. And over the last 354 weeks, we have issued over 19,600 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Now, since the markets opened last night at 6 p.m. Eastern, we issued a total of 15 alerts. When Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 4. So that gave us 11 actionable alerts, of which so far nothing has been stopped out. We finished last week with hold on there. Let me take a look. I have it at my fingertips. Let's have a peek. How'd we end up last week? Last week, we issued a total of 67 total alerts. 16 never triggered. That gave us 51 actionable alerts, of which 3 or 6% would have been stopped out, again based on market structure and a simple process we teach all of our passport holders. Last night, as soon as the markets opened, now you're seeing Pacific time on my screen, but if you're on the East Coast, that says 6:02 p.m. Okay? The way Telegram works is it reads the clock on your computer. So whatever time zone you're in, that's what's going to show up here. So 2 minutes after the Globex market opened, we started putting out the logic alerts. I've always told you we go to work Sunday night as soon as the market's open. We had a short on the ES. We had a short on the Dow. We had a short on the Russell that will probably fill before Valerie redoes the recap today. Short on the NQ, a long on gold. B means buy, T means initial target. And every alert not only has an entry price and an initial target, but typically they will have additional targets and then a final trade to target. If it's a long, it's the weekly zone above. If it's a short, the final trade to target is the weekly zone below. Here we had a gap fill on silver. we had a long on crude oil. Now, because it's a short, you wanted to buy, long, you wanted to buy 61.55. Initial target 61.65. Boom, there's your goal for the day. The next obstacle, target, or potential resistance was at $62. And then the weekly trading zone above was 63.75/63.80. Now these are last week's weekly trading zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So remember that. All alerts that go out on Sunday night, logic and CTAs, are always based on last week's zones, and then anything issued after 6:15 a.m. Monday morning are based on this week's zones. All of our members had this week's zones at 6:15 a.m. Eastern this morning, and once they're published, they're carved in stone for the entire week. And you're going to see something wild here when we go to the charts, so hang on. Here's a long on the ES, okay, by 57.72, initial target 74, bang, go over the day. Potential resistance or target at 57.80, potential resistance or target at 57.90, and then the weekly trading zone, the final trade to target 57.98. We made it all the way up to 58.53. So let's just think about this for a second. 98 minus 72. 98 minus 72. That's 26 ES points. That's a whole week's worth of work right there in that one alert. We had a hedge on the Dow, no entry on the first trigger. Here we had a long on the Russell, okay? 2083 to 2085 to 2090 to 2120 to 2140. And at the time Valerie was doing the recaps, we made it up to 2139.60. Missed that by 4 ticks, okay? Then we had a hedge on the NQ. Buy, initial target, weekly zone. We had a short on gold. This is one of the 4 that hasn't triggered yet. And here. And then we had a short on gold. Selling 32.65. Gold for the day right here at 32.64. And then the next potential support was at 32.60. And I believe we've dropped below that now. But at the time she did the recap, which was very early this morning, like 6 o'clock, I think is what I said. So all of this happened Sunday night. Now, these are futures. Remember, stock traders had to wait till 9:30 a.m. Eastern this morning to take advantage of all this good news that came out over the weekend. Now, it can work for you. It can work against you. But anyway. So, last week, out of 51 actionable alerts, 6%, or 3 alerts were stopped out last week. So we had a really good week last week, by the grace of God. Now, let me find this again, so you can take one more quick look at it, and then we'll move on. What I just showed you was 15 alerts issued last night. Still waiting on 4. 11 actionable. Nothing stopped out yet. The week is quite young. And we crossed last night 19,000. We published alert number 19,600, and then a few more. Okay. Now we're coming up. We've now got less than 400 alerts before we hit that big round number at 20,000. And everybody keeps asking me, well, what's going to happen at 20,000? I haven't decided yet. Stay tuned. But make sure, you want to trade them? Fine. But please make sure that you use them for the reason they're created. to help you learn how to read a chart. If you want to be an attorney, you got to be able to read case law. If you want to be a doctor, you got to be able to read the medical journals. If you want to be a trader, you got to be able to read the chart. And that's a whole different language. The logic alerts will help you learn to read a chart. Now, 354 weeks, that's a very long time, but long before we had Logic 247, we had our original alert service, the Concierge Trade Alerts. I knew it was a little risky publishing them before the open last night, but I went ahead and did it anyway. And you'll see why it was what I'm talking about. So last night, 5 minutes before the open, all of our members, all of our trial members had all of these targets. Okay, S&P, Dow, Russell, crude, NQ, gold, and silver. Okay. Now that usually works out real well, but last night was a very unusual night. So let's go look at the charts, because Mike will be showing up here pretty quick. And I want to get through as much of this as I can. All right. Here's where we always start. Daily chart of the S&P, E-mini futures, the bellwether. We've been in a downtrend. Leg, retrace, leg, retrace, leg, retrace, leg. The failure here to continue the trend means we could be in an uptrend. So look at it this way. Leg, retrace, leg, retrace, leg, retrace, leg. Now what? Price always reverts to the mean. In our case, the mean is green. It's called the BBC. It stands for bull-bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Price crosses above the green line, we expect higher prices. Now, last week I was talking to you about the importance of this, and that's right where we opened last night. That's a big gap. And then I talked to you about the importance of these highs right here. Okay? And we did manage to spike them a little bit, but I think the steam is starting to wither in this rally. Okay? Now, as you can see, when price pulls back to the BBC, whether it pulls from below, see how it pulls up, and then it pulls down, and then it pulls up, and then it pulls down. The pullback to the BBC holds more often than it doesn't. But eventually, it will trade through, like it did here, and like it did here. I think there's some irrational exuberance here, and I could be totally wrong, but we'll see how we close the session. Okay, my little yellow arrow here calling for a pullback to the BBC. Well, price always reverts to the mean, so maybe we do go a little higher, but by the end of the week, I suspect we're going to be closer to the other end of the spectrum, because last night well, here, let me just show you. This was the gap higher open. Okay, now these are last week's zones, because remember, everything that goes out on Sunday night is based on the previous week's zones. But once the new zones come out Monday morning at 6:15 a.m. Eastern, anything else I publish this week will be based on this week's zones. This was the gap open last night. We gapped way above the long target, but we hit the weekly trading zone, which we expect to be resistance. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So again, this week's highest weekly zone is 58.25/26. We're already above it. Now, what we've learned in the last almost 15 and a half years is that anytime we hit the highest or lowest weekly trading zone by Tuesday morning, the probabilities are that we'll be at the other end of the spectrum by the end of the week. Okay. Well, this time it happened on a Monday morning. Now, look at this London Open. See, London stock traders got to trade the news at 3 a.m. Eastern, while U.S. stock traders were tossing and turning, wishing they could. So we had the incredible gap open, roughly what, 56.86 up to, where'd we open? 57.61. But then, here's the London Open. We opened at 57.67, and ran all the way up to 58.53. Okay, so that's not quite a 100-point candle, but it's pretty close. Was it 80 points? Is that right? Yeah. Now, price always moves in legs. You know that. So we get a leg and a retracement, and a leg and a retracement. And this morning in the live training room, I said, guys, I think we're about to find support, because the market was coming down. I said, I think we're about to find support, and that's because price was headed for, remember I said price always reverts to the mean? There it is. Okay. Right after the second 30-minute candle. Now look, we ran up to resistance at the black step line, and that sent us right back down to support. Support bounced us up to resistance at the step line, and then we actually spiked the BBC. We got a leg, we got a retracement, we got a leg. We've overcome red and falling. Honestly, I'm a little surprised to see that, but we're early in the week, okay? And remember, this trade deal is not a done deal. It's a truce. And we know how easily those things can change, okay? So, given this scenario, where should you expect resistance? Potential resistance. About 58.53. So there is a beautiful window of opportunity. Oh, from about 58.47 to 58.52. That's what did I say, 47 to 52? 5 points. 5 points right there. You only need 2 points to get your goal for the day. I would even be comfortable moving that down just a touch. Okay? But I want to be out or ready to get out before we get to the high of this candle. Now it's possible we trade up through this resistance and get to this area. Right there where blue turned to red. Blue and climbing's bullish, red and falling's bearish. Okay, so this rally, if we continue higher, okay, initial resistance here, then here, here, here. Okay, all right. So are we concerned about the fact that we're above the highest weekly zone on a Monday? No, not at all. Because I think it's going to create some really great short opportunities later in the week. We have 15 and a half years of history to back that up. Not just pulling numbers out of the air. Okay. Let's go to the Dow. Again, we gapped open above the long target. We gapped up to here, ran up to here, and then we pulled back to the weekly trading zone where the market found support. Remember, when price drops to a zone, we expect support to prove it otherwise. Here, this was beyond our control for sure. That's at 3 a.m. London Open. Bang. So you get a big leg like that, you got to expect the retracement. Blue and climbing held. We get another leg, a retracement. But right here, the step line. You see how on the way up, the black step line is on the left side of blue and climbing? Once it crossed, that told us to start expecting a retracement back to the BBC. And we got it to the tick. If we close, if this current candle, which has 9 minutes left in it, if it closes above red and falling, this isn't as simple as the ES because you got potential resistance here and then here. You don't have as much space in between. Now, could you trade, come on mouse, 42,380 to 42, what's the high of that candle? To 42,400? Yeah. 42,380, 42,380 to 42,400. 20 points, go for the day. Okay? All right. Russell. Russell gapped above that long target. Okay? And then we pulled back down below the zone, and then we did a little bit of consolidating. The step line crossed, but we would have pulled back to the BBC, but those London traders, man, drove us, interestingly, right up to last week's highest weekly trading zone on the Russell, 21.40. Important prices and important areas are almost always tested. Okay? Now, just because we have new zones this week, right, and they take precedent, the old zones are still important prices and important areas. You would do well to keep a journal that you can refer to. So we get the leg, the retracement, and on this leg we fail to put in a higher high. We get below the BBC. Okay, traded right through it. That in and of itself a little unusual. Okay, on the ES we got the bounce, on the Dow we got the bounce. Now we've snuck back above the BBC. So where's your trade? Where's your opportunity? Well, you need to let this candle close. But if this market's really going to try to do its thing, what do we got? 2112 up to 2116. That's 4 points. You only need 2 points to get your goal for the day. Now I'm leaving room because there's still 6 minutes left in the life of this candle, and I want to see if the next candle is going to open green and keep climbing, or is this whole thing right here going to become a head fake, and when the next candle opens we head lower? That's a great question. What happens if that does, what I just said happens? What do we got here? 2078 to 2075. That's 3 points. You only need 2 points to get your goal for the day. And right there, that's all you need. By the time we talk tomorrow on this afternoon broadcast, price is either going to have filled this window or this window. Could happen before the end of this broadcast. In Q, we gapped higher on the open, pulled back into the zone, found support. Support sent us up to resistance at the zone. Okay. And then there's that London Open. Boom. Leg, retracement, leg. Now see how the step line crossed? It was on the left side, and then it crossed over to the right side of balloon climbing. And what happened? Price pulled right back to the BBC. And the pullback held. The pullback holds more often than not. Okay? Now, we opened above red and falling. So as long as we close above red and falling, there's a very good chance we continue higher. But you've got potential resistance here, 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 here. There's just no wide open space. So I would have to, before I drew in a window of opportunity, I would need to see how this candle closes and if the next candle opens green or red. But obviously you can see this little, and because you don't need a lot of room, like 28.94 up to 29.04, that would be $200 per contract traded. What did I say, 28.94? Yeah, 28.94 to 29.04. You could barely see that line move, right? That's $200 per contract traded. All right, crude oil. Even crude got a little gap higher open, and it gapped right into the long target. Resistance sends the market looking for support. The pullback held. Sweet a leg, a retracement, big leg, 3 a.m. London open, and a retracement, and another leg, but we didn't quite make it to the highest weekly zone from last week. I believe that's the highest one. Yep, 60. That was last week's highest zone. Tomorrow on the broadcast, you'll see this week's zones. But all the alerts that we're looking at were published last night, so they were based on last week's zones. Now crude has traded below the BBC. We got lots of red and falling overhead. And this morning in the live training room, I mentioned that we could potentially see $1 drop in crude. And so we haven't dropped $1 yet, but as red and falling crosses below the BBC, I think that takes us back to the top of this long target. So Michael is here. We'll pick up on gold when I come back. Right now, he's going to give us a recap of what happened this morning in the live training room, and then do some live trading on TradingView. I'll come back, finish the recap of the alerts, and wrap things up with our good word for the day.
All right.
Oh, you sound a little distant.
Uh-oh. Yeah, put it a little closer. How's that?
Yeah, yep, that's perfect. Okay, and the charts look good. It's all yours.
All right, here we go. There. Good afternoon, everyone. Happy Monday. Today is the 12th day of May, 2025. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button, and it will bring you to this registration page. Close the other one. This registration page. All right, on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, make sure you give us a TradingView login ID. Okay, if you want to have the indicators indicating on your charts, we need to get that TradingView login ID from you. All right, hit register. Once you hit register, you'll be sent to everything you need to get into the room in the morning. Okay, now today, let's see. Today we had a pretty good day today. All right, well, we got the goal early on, which is always good. I was hoping to get over $1,000 a contract today, but I messed up. Well, I didn't really mess up any trades. I just didn't take as many trades. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today it's the 12th day of May, 2025. We're up 60 on the NQ. We were up 26 on the Russell, 37 on gold, and 14 on the ES. Put us at $9.75 per contract on the morning session. Today it took 4 minutes and 2 trades to get to the goal for the day. At that point, we're up $1,000 with 10 contracts. We took a total of 24 trades. So on the month now, we're at $7,257. That is with 1 contract on. Over 7 business days, averaging $1,036 per contract per 2-hour business day. On the year, we're now at $127,075 over 79 business days, averaging $1,608 per contract per 2-hour business day. Now, following the 24/20 blueprint, if you were to quit trading when you get the goal for the day, the goal being $100 per contract, and add one contract for every $2,000 that you make, you would be adding roughly one contract a month. So if you just added one contract a month, right now you'd be on your 5th contract. If you did everything just like I did, exactly like I did so far this year, you would have only had to work 10.25 hours, and you would be up $36,572, averaging $3,568 per contract per 2-hour business day. Okay, let's get into the trades we got going on now. All right, so sorry, I just totally distracted myself. All right, we did the spreadsheet part. Today on the gold, we had the majority of our trades are actually on the gold today. Well, we had the same amount of gold in ES, but we'll just go through the gold first. Okay, had some pretty good movement on the gold, and things were going pretty well with gold. I did stop out one time on the gold. Here we go. Our first trade of the day was right here on gold. All right, we ended up, what the heck, man? I didn't put that one in. We got, okay, our first, that I did put that in. Okay, our first trade of the day was a break even. Then our next trade was right there. We got +2 ticks on that. Then the next trade was over here. We stopped out -13. I mean, we're at -13 after that stop out. Then I said it was going to get down there and bounce, and it did. At a break even. Then right here, we picked up 6 ticks on that to get us to -7. Then right here, we picked up 25 ticks there to get us to +18. And then we had 11 ticks there to get, I'm sorry, we had 8 ticks to get us to 24, and then 11 ticks to get us to 35, and then 2 ticks to get us to 37. And that was where we wrapped it up for the morning session. It looks like there was some really nice movement here during the break. We're expecting there to be nice movement when the European markets closed, and it did a little head fake to the upside, and then it moved down. Look at these nice leg lengths right here, though. That is really nice. Those leg lengths, they're just giving you great opportunity after opportunity after opportunity after opportunity on those. Really nice leg lengths. Got a little choppy through here, and if it gets choppy like that through there, you can throw that on and start taking the aggressive trades in here. Most of those look like they worked out really well. And there are a couple more trades in there. Good ones. So that was it for the gold. Now I'm going to go to the Russell. We only had a couple of trades on the Russell. We had the one where we got our goal for the day. The one where we got our goal for the day right here. We picked up 20 ticks on that. And then we had one more right over here. We picked up 6 ticks on that. Those are the only trades we took on the Russell. It's not the only trades that there were. They're just the only trades that we took. Okay. I was being pretty conservative today on the Russell. All right. That is the Russell. So now we want to do the ES. Okay. On the ES, let's go all the way back to the beginning. We had a bunch of trades on the ES compared to everything else. We had a bunch of trades on the ES. Here was our first trade on the ES, and we picked up 4 ticks on that one, 8 ticks on that one, and 8 ticks on that one to get us up to 20. And then I thought it was going to pull back to this level and bounce off it. That was going to act as support, and it did 3 times. And then I thought it was going to pull back to that and bounce off it, and it did. It actually stopped me out. I should have gone with the conservative trade there, but I went with the aggressive trade, and that stopped me out. So I went from there. We're on the ES now. I went from 24 down to 14 right there. Okay. Then here I went from 14 up to 22. So I picked up 8 ticks there, and I had a break even. That put us at 22, right? And then I stopped out down to 12. And then here I picked up just a couple of ticks to get us back to 14. And that is where we ended it on the morning session. But look at the nice run we've had here recently. It's a nice run right here. We were kind of expecting Well, something to happen anyway when European markets closed. And that was the ES today, right? The NQ, I hardly traded the NQ today. Those are most of the trades right there. They're all right there. Our first trade was right here on the NQ. We picked up 4 ticks on that one. The next trade was here. We picked up 20 to get us to 24. Then we picked up, from 24, we went up to 52. So that was 18 ticks right there, I guess. 24, 34, 28 ticks. Yeah, 28 ticks to get us up to 52. And then from 52 to 60, so just 8 ticks there to get us up to 60. And that was it. And you can see the same leg that we had on the ES, we got right here on the NQ as well. And that was it. So this morning, 60 ticks on the NQ, 26 on the Russell, 37 on gold, and 14 on the ES for a total of 975 with 1 contract. All right, now on the morning, it took 4 minutes and 2 trades to get to the goal for the day. At that point, we're up $1,000, and we took a total of 24 trades. So on the month now, we're at $7,257. Over 7 business days, averaging $1,036 per contract per 2-hour business day. On the year, we're now at $127,075 over 79 business days, averaging $1,608 per contract per 2-hour business day. If you're doing the 24/20 blueprint and you added 1 contract per month, so far this year you would have only had to work 10.25 hours, and you would have averaged $3,568 per hour for those 10.25 hours. You'd be trading 5 contracts now, adding 1 contract per month, trading 5 contracts now. You'd be up $36,572 for those 10 hours of trading. Okay, pretty good stuff. I guess I didn't say this right. If you haven't taken the free trial, go here to mytradingq.com, click on the purple button. No credit card is required. Click that, go to the registration page, fill out the form. Just fill out the form. All right, now let's have a look at what we have going on. We're above the YBR there, and we're below the YBR here. Now, this had a decent short right here a few minutes ago. It's got to put in a lower swing. Well, it doesn't have to put in a lower swing, but I'd like it to put in a lower swing. All these guys, they all need a deep pullback. I doubt that they'll get it, but they all need it. If you look at it, I didn't bring the question box out, just in case there were any questions. I don't see a single question. Okay. Let's see, right here. You would be drawing, now when you're above the YBR, you draw from the top, from the YBR out. Okay, so because it went above the YBR, you got to take it from the last time right over here. You go up like that. Okay, this is what you want to see it pull back to. That's what you want to see the Russell pull back to. Now we'll redo the one here. We'll redo the one here. And that starts all the way over here. All the way over there. Okay. And the NQ isn't as dragged out as that one. But here's the NQ. All right. Now I don't expect that the ES is going to pull all the way back to the midpoint. The Russell could, but I doubt it. The NQ is one that might pull back pretty close to the midpoint here before we get another trade. So you just got to be, you could take it from the last leg length here too, from the very last leg length right there. You could look at that. And over here on the S, it would be this leg length right here that you'd be looking at. And over here on the Russell, it'd be this leg length right there that you're looking at. All right. You could do it that way as well if you wanted to, because the chances of it retracing that whole thing are pretty slim. But let me find my DOM and see, we're oversold right here. Now, this is not a place that you want to be aggressive. You want to wait. You want to wait. Over here now, The down close of this one, the down close of the next one is a place on the S where you might want to be aggressive. On the NQ, I'm sorry, not on the NQ one. Right here, an up close on this on the S, a conservative trade, is something you might want to take. 54.25 up to 56.25. Here it is. There it is. Window always on top. That's it right there. Okay, and we'll see if that comes around. Maybe it will, maybe it won't. The Russell's needs a down close here. Okay, the Russell hasn't pulled back far enough. The NQ, I'd like to see the NQ give a down close too. I'd be aggressive on an NQ down close here. Okay, and there we are. We're in the ES trade now. And that should make it all the way up to 61, all the way up here. But we're going to bump our stop to break even after 4 ticks in profit. And there's 4, so stop goes to break even. And it really should make it all the way up to 61. It might come back and take us out of break even. Probably will. It just did. Okay, this is not a good spot here on the NQ. I would wait for a pullback on that bar right there. Okay. If you look at the NQ DOM, it doesn't really have any big numbers in it, but the nearest big number is down at 1150. And 1150 is, well, it's right here at the swing low. You look below that. Let's see. 900 is the one below that. And 900 is right there. So this is where it's going to try to get down to, right here. All right. You guys, just so you understand what I'm looking at, this number right here in the DOM, 20,900, that happens to be the 50% retracement of this leg right here. And I did a thing about this last week or the week before about positioning your entry so that your stop's not in the wrong place. Right? You want to make sure your stop's not going to be right here.
I don't know if you noticed the big picture, but gold dropped $100 today.
Did it? I didn't notice that.
Yeah,
I did
sure
not notice
did.
that. That is a big drop. Oh yeah, look at it. Look at it. And it's at a perfect spot for a bounce right here. Right here on the 30-minute anyway, it's at a perfect spot for a bounce. On a daily, it was at the low of the day. It was a perfect spot for a bounce. Now it could be the whole dead cat bounce thing, and bounce up to 341, something in that area. If I go back to the 30-minute,
I spent a lot of time at the beginning of the broadcast cautioning everyone to not get too overly optimistic about this trade news that came out because it's far from a done deal.
Oh yeah, it's just talk.
It's a temporary truce, and they shook hands and smiled at each other and said, we'll talk later in the week, but who knows what she did when he walked out the door and said to his cohorts. And then the same with Trump, I guess. I mean, you don't know.
Yeah. I don't know either. I
just know last night was the wildest Sunday night I think I've ever seen. That London Open at 3 a.m. I said it was a 100-point candle earlier. It was more like 80 points in 30 minutes. Because, you see, that news came out yesterday, but American stock traders had to wait for the Wall Street Open to take advantage of it. But the European traders got to take advantage of it at 3 a.m. Eastern. Us futures traders, we always get to take advantage of the overnight stuff.
Yes. The Americans on the European desks, they're the ones that got to jump on that fun ride. The expats is what I'm talking about. But anyway,
it is possible to open an overseas account. I'm sure there's all kind of red tape you got to go through to get it approved and all that kind of stuff. But I don't believe it's illegal for an American to actively trade a foreign market if you can find a broker that will take your business.
The easiest
I
thing
don't
is
know
to just
anyone that's
trade
ever done it.
futures.
Yeah, just trade futures. You don't have to worry about
Just
any of
trade
it.
futures. Right. Just do what we do. Trade what's in front of you. All right. So the Russell is really making an effort to get down there to that midpoint. Now, if we were to get a bar that came down here and pulled up off of there, that would be a conservative entry that I would want to take right in there. The ES, I didn't figure it was going to do anything more than what it did from right here. We took what we could out of that, and it didn't give us anything else. The NQ was a horrible spot to enter on the up close right there. And that number in the DOM that I pointed out just a few minutes ago at 1900 is now right here, right there. Right. That's the number in the DOM that I thought price was headed toward. We're not going to have a trade opportunity on this because it didn't go into the overbought the last time it came out. But I think it's going to probably get down to this area right in here and bounce off it. It might not. The ES has dropped right through. So, we were lucky to get out of the ES with. Did we ever break even on the ES, or did we take some profit on that? I don't remember.
I don't remember. But speaking of break-evens, guys, break-even used to be an expensive venture, especially if you're trading 10 contracts. But now that we're dealing with such greatly reduced commissions, it's really not such a big thing.
Yeah, it's not that bad. It was a break even. I just went and checked the numbers.
In fact, if you trade with us, I have the numbers right here. Where'd I put it? Yeah, futures are $1.29 and micros are 50 cents.
$1.29 per side.
Per side plus exchange, yeah.
Yeah. It comes out to like 250 something is what it is, which is not bad. I mean, we used to pay 580. So
yeah, we were at 580, but we would have people come stumbling in and they were paying like $20 a round turn.
Yeah.
And
yes.
we had to get them straightened out.
Yes.
Get with the right broker.
To a person who is actually going to answer the phone when you call.
Yeah, and such a person, his name is Bert, 866-928-3310. He has been our broker since 2008, so give him a call.
Yes.
He's a nice guy. Be happy to talk to you. Just say, hey, I heard some yahoos talking about you on the internet today, and he'll know exactly who you're referring to. And he'll answer any questions you have. And set you up with a trial if you want, or whatever you need.
And he's resourceful.
He'll do his best to help you. Good guy.
All right. Well, things have slowed right down here, guys. They are just crawling. So I don't know.
I think we're going to have some great short action later in the week.
Yes, I expect we will.
That's just an observation, not really a forecast.
It would be.
Guys, if you have any questions, type them in. Nobody sees what you type, but myself and Michael, if you're over on YouTube, the world sees it. But if you're logged into our platform, then nobody sees it but me and Michael. If you have questions, ask. That's how you learn. Okay? I thought I was going to learn Spanish simply because I used to go to Mexico every other weekend. 2 years later, I realized that I was not going to learn Spanish by osmosis. And I still don't speak Spanish, so because I never took the time to sit down and learn,
Gotta watch Dora the Explorer.
And whereas, I mean, you can find anybody to teach you Spanish on, throw a rock in any direction. You'll hit somebody that's, willing to teach you Spanish. But finding somebody to teach you how to trade, that's a trick. Okay. That's why we do 2 hours of live training for our members every trading day. Plus private
Finding
one-on-one mentoring.
finding trading tools is not a hard thing either. There are tons of tools out there, but again, finding people who are going to actually sit down with you and teach you how to use those tools, and a lot of other things.
Yep.
That is where we shine. All right, so the indexes are all dropping kind of, and the gold is starting to have a leg up right here. So the gold's getting set up for a potential long trade right now. And the way that that looks is like this right here. Okay. So this, you could be aggressive on the long right there on the gold, I guess. Might want to wait for it to come out of the oversold, but coming out of the oversold is going to put you right here. If you're aggressive on it, I was aggressive. Here, I'm throwing my stop break, giving it right over and show you. Here it is. I'll lock in just a tick on this. And it should make it up to the prior swing high, which is right here at 3.1, right there. Okay. I'll move my target down there to 3.1. And that would be 15 ticks if it gets up there. I am just going to lock in, well, I'm going to lock in 5 or 6. 6. There we go. Now I'm going to lock in 10, and we got all 15. That was a pretty easy trade to take. Okay, so thank you. And the ES has pulled back to another level of potential support right here. It's 100% retracement of this leg. Now, I would have liked it a little more if it hit that level of support when it came into the oversold. It's not a trade I'm going to take because we never went into the overbought from the last one over here. Okay, so it's still showing weakness on the upside. It's got to get into that overbought and then come back and get back out of the oversold. It's going to do the cycle. The same thing over here on the NQ. So Dwayne, you know how you had that whole trash truck incident back a year ago or so? I just had my own little trash truck incident today.
Oh, yeah. It's been actually about 3 years, probably.
Has it been that long?
Yeah, it's been a long time.
Well, anyway,
I went to court, fought it. I mean, my car was the only one damaged. The trash truck didn't get hurt, and I ended up having to pay $300 because I took it to court. Actually, the mistake I made was calling the police to the scene of the accident to try to explain to them, but the city employees, the police and the trash truck driver, and in Phoenix we have city sanitation. I know some people in rural areas got to haul your own trash or whatever, but they huddled up and they really gave it to me. Anyway, what was your trash truck story?
Oh, well, the guy was on his phone. He was sitting there and he had the trash thing around the can, and he was right on the corner of my street. And I live in a cul-de-sac, so those trucks are pretty wide. There's just enough room to get by. And it was right in front of Peg's house, and her trash can was on the road, so I just fit in between with my truck, and my mirror hit his. And it didn't cause any damage. I just drove right by, and my mirror hit his, and I went, because he was going into the cul-de-sac. So there's no way I'm just going to drive by, because he's going to drive around and see my truck there at my house at the end of the cul-de-sac. So I just went back to him and he said, I thought I heard a thump. I said, yeah, that was my mirror. I said, we just hit mirrors, no big deal. And he's like, no big deal. I hardly even knew. That was
I'm glad your story ended happily.
Yes, mine ended without any dents or anything like that. But it just reminded me, I remembered your story because that just happened to me. But it made me think of your story because I knew that yours did not have I'm sorry I brought back that bad, Mary. I apologize.
Do you have an attorney? I go, why would I need an attorney? A trash truck hit me. Why would I need an attorney? She ruled in favor of the trash truck.
When the guy was on his phone, he was just sitting there with the hook, the thing on the trash can. He was just sitting there. And so I had to back up to get around him. I backed up and I pulled around him. And I thought I had enough room. I can't believe my mirror hit something. I think it hit his signal light. It didn't hit his mirror. I wasn't looking at his signal light. I was looking at his mirror. My mirror was going to fit right under his mirror. That's what it did. It hit his signal light. Well, either way, it doesn't matter. He doesn't care. All right. So as far as trades go, this was 100% retracement right here. The entry right there on the gold isn't a bad one right there. It's a pretty good spot. It should make it up to the prior swing high. It just barely, it showed a little bit of strength by making it up to the prior swing high. Here, I'm sorry. And I'm going to lock in a little bit of profit on this one because I should have had more. Crap, I should have had more on the last one. At this one too. It's where the yellow is, right? It's where the yellow is. So I'm going to try to take 10 out of this. I am taking 10 out of this. All right. And it should make it up here to the prior swing high. It should go through the prior swing high. The indexes here, they are pulling back pretty deep, deeper than I thought they were going to. You see, this is the midpoint of the larger pullback, and this is the midpoint of the larger pullback. Now, if I get rid of this one, and I get rid of this one, this is the larger pullback of that big leg up. I wasn't expecting to pull back that deep, but it did. And so that's what we have. Now you see over here on the gold, we went up into the overbought again, but we didn't put in a higher swing. Okay. We're above the YVR, so we're not going to take a short right here. To hit the midpoint here, it's going to have to flip the YVR, which is going to put us in kind of a weird spot on the ES. All right. And
Yes, we're still way above the highest weekly zone.
are we? We got back up above it.
We
Because
dipped
I knew
below
we'd gotten down to it.
Yeah, we got down to it. Now we're so. Yeah. For those of you that don't know, for 15 and a half years, we've said, or we noticed over a period of years, and we've talked about it and traded by it since, that if you hit the highest or lowest weekly trading zone on any of the markets by Tuesday morning, chances are at the end, by the close of business on Friday, you'll be at the other end of the spectrum. It happened on Monday morning this time, or it happened Sunday night, overnight.
Yeah.
So, but that's okay. We won't change. We're not going to go back to the drawing board and start from scratch. If it doesn't end up doing what it has typically done for the last almost 15 and a half years now. June will make 15 and a half years.
Yeah, I mean, if you think about it, that's 15 years, and it probably happens 2 to 3 times a year. So you're talking about maybe 45, 50 times over the last 15 years. And out of those 45, 50 times, there's been about 3 where it hasn't done it. And the 3 were because there was other things, other global things that were making it not react the way that it normally reacts.
Yeah, this is definitely not normal market conditions. I mean, this whole trade war deal. I mean, everybody's all up in a tizzy, and if everybody would just calm down and realize that eventually it's going to work itself out. Mm-hmm. That's how the world works.
It's going to work out in our favor.
That too.
All right. Well, we're above the YBR here, here, and here, and we're above the overbought there, there, and there. So we're not going to have any trades there. We're above the YBR everywhere, but we're in the oversold here. But this is not a place that you want to go long right here. Okay, we're getting down to 100% retracement of that leg, I believe. Let me just take a better look at this. Yeah, this leg, it's 100% retracement of this leg. Now you wouldn't want to go. See, you wouldn't want to go long anyway because the last one didn't make it into the overbought. So let me say this. It's about time to wrap it up anyway. So let me say this. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button. When you do, you'll be brought to this registration page. Just fill it out. All right. Make sure you give us your TradingView login ID down here. If you don't have a TradingView login ID, click that button and get one. Okay?
No credit card required.
Right.
Just show up, pay attention, and ask lots of questions.
It says it right there. No credit card required for the trial. And that's it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park.
Okie doke. Recap of the morning session.
Well, today it took 4 minutes and 2 trades to get to $1,000 with 10 contracts.
Good job.
Thank you. Thank you very much.
All right, guys. Let's pick up where we left off. Gold. That's where we left off. Okay. Now, unlike the indices, gold gapped down below the short target. Okay. I knew putting them out 5 minutes ahead of the open last night was a bit of a risky proposition, but whatever. So we had a leg and then we pulled back up to the zone, which we expect to be resistance. See how the zone here is support, resistance, support, right? So we had a leg, a retracement, a leg, a retracement, and then that big 3 a.m. on all the indices. Remember, it was a huge green candle, but on gold, it's a huge red candle. And we found support at the zone that was created a week ago, last Monday at 6:15 a.m. Eastern. So finally the step line crosses red and falling, and notice on the way down you got price, you got the step line, you got red and falling. The step line's on the right side of red and falling, but right here it crosses over to the right side of red and falling. And we know that that means price is going to attempt to pull back to the VBC. And we had resistance times 2 here. The pullback to the VBC holds more often than not, and we expect resistance at the zone. So we tried for 1, 2, 3, 4, 5. We tried for 3 hours to break through that zone. Couldn't do it, but we then found support at the zone below, and that's where we're at right now. But we're below the VBC, and red and falling has entered the picture. So I suspect gold's headed for 32.13. You have potential support here at 23. Got potential support here at 18. And then right here where red turns to blue. But you only need a $1 move in gold to get your goal for the day. Okay, silver also gapped lower, hit the short target, bounced up to the BBC resistance, sent price back down to the zone support. Support sent the market looking for resistance. Didn't quite make it all the way to the zone, but if we scroll, right there, bearish cross, boom. Okay, then price comes back down. Oh. And this low here, that's not an area I would have anticipated. Joe, market structure is how I view the markets, but over 350 weeks, whatever I told you guys earlier, and 19,600 individual alerts, we know that 20% of the time the market, 20% or less, because last week we only had 6% stop out, 20% or less of the time price is going to do something other than the next high probability thing. And we waste no time or treasure trying to figure out why it didn't do what we thought it was going to do. We just look for the next opportunity, okay? And until you get that mindset, you're going to just be tortured day in and day out. And you know, who wants to wake up and go get tortured? I don't. So we bounced to the BBC resistance, set us down to support at the zone, set us back up here, bullish cross, and then boom, leg, retracement, leg. Now see, we failed to put in a lower low right here. So we go back to the BBC resistance and then we drop to the zone. See, we hit the BBC to the tick, and then we hit the zone support, and that bounces us back up to here. We overshot this bullish cross right here, and we've now retraced back to, we're below the BBC, so now we're expecting lower prices, especially because red and falling has come into the picture. So you want price to take out the low of that candle, and then you have a beautiful window of opportunity right here. Let's bring this top down just a little bit. Okay, that's very conservative. 32.49 down to 32.43. That's $300 per contract traded right there. If you've earned the right to trade 10 contracts, it's $3,000. So that is the deal. Now again, these are last week's zones. The new zones came out this morning at 6:15 a.m. Eastern. And so on tomorrow's broadcast, you will see this week's zones. Now, let's run through them real quick one more time. Okay, remember that window of opportunity, guys, that we drew at the beginning of the broadcast? Filled. Now, what if we start to sell off here and price gets below the BBC? There's your golden ticket right there. Sell 58.14. No, sell 58.13. Take profit at 58.09. That's 4 points. How much was this one? It was 47 up to 51. That was 4 points. But it went further. I mean, you could have stayed in it. And I said, if we take out this high, now remember, and if you weren't tuned in, you can go watch it later at youtube.com/CFRN. I said, definite resistance up here where blue turned to red. But you see the highs of these candles? That's exactly where this high is right here. That's market structure. So we got it on the upside. Now if price drops below the BBC and takes out these lows right here, boom. You can wait for the trade to come to you. All right. We didn't draw anything on the Dow. Oh, we drew on the Russell, but nothing's triggered yet. Price came down, but it didn't enter the window. And this window was based off this wick right here. So if we move up, this window's still valid. And if we move down, this window's still valid. Okay. A window of opportunity or a Logic 247 alert remains valid forever until it gets triggered. The NQ, that little move that it was such a small area to work with. I didn't really have room to draw the bots, but I told you it was worth $200 per contract. We got it right there. Crude, we're back below the BBC. We got red and falling. We're consolidating sideways. Now the step line's about to cross red and falling, so I could be wrong on that dollar drop. But because once the step line gets directly below price, it can become support. But it looks like price is actually below the step line. So once price takes out this low, at a potential drop to there, and then great window of opportunity right there. from call it 61.70 down to 61.50. That's $200 per contract traded. One last look at the daily. We're just off the high of the session. I remember just back on Friday, we were talking about how this was potential resistance, and that's actually where the market opened last night because of that huge gap up. And then we said this would be the next resistance. We've traded through it. Now, if this market defies my expectations and continues to climb, the next major resistance is going to be right about 60.57. And then this bearish cross right here where the red line gets below the green line, 60.97. This very well could be the beginning of a new uptrend. We've been in a downtrend since February. However, at some point, price is going to come back to the BBC because price always reverts to the mean. And in our case, the mean is green. It's called the BBC. So we'll see how strong we close today. If we close today with a little green body and a big wick sticking up, then tonight, overnight, you can look for price to come back down. Okay? That's my story. I'm going to stick to it. That's all I got. Want to become a member? Go to mytradingiq.com. Watch the videos, read the content, and then when you make up your mind, send us an email that says I want to become a member. Send it to support@cfrn.net. We will in turn send you an email that explains everything it means to be a passport holder and provide you with a link you can click to instantly seal the deal. Number one, you're going to get 2 hours of live training every trading day in an interactive environment. Live trading in live markets with constant running commentary of every trade, why it's taken, what happens with it, the entry price, how many points were gained or lost, or was it a break even, everything. While you trade along in your demo account so that you can qualify to go live and ask every question that pops into your head. Because until you ask the question, we can't give you the answer. And chances are, if the question's in your head, it's in somebody else's head too. So do everybody a favor and just go ahead and ask the question. Nobody sees what you type in the mornings but me and Michael. Okay? Occasionally Valerie's in there. Occasionally Bert. I don't think Bert's in there too much in the morning anymore because he's so busy with all this stuff switching over. Now, along with 2 hours of group interactive training every trading day, you have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. Tim, you're asking, what is that a chat of? GSIN. Oh, chart? You mean, you meant that was, what is that a chart of? That's silver. GSIN. That's silver. You only need 2 pennies of movement to get your goal for the day. A 2 penny move is worth $100. So like this candle here that was headed to the long target last night, it opened at 32.90 and it ran up $600 per contract in that one candle, and then it continued on to the target and it almost made it up to the zone. So that's silver. Okay. Noticed you, yeah, I chart on DT Pro. So on DT Pro, it's just SIN. Just like on TradingView, gold is just GCM. Crude is just CLM. Why DT Pro threw that extra letter on there, I don't know. I never bothered to ask. Okay, so that answer your question? Okay. Well, alrighty then. And I already said you get the weekly trading zones on Monday morning, and you get to attend the members only workshop every Thursday night at 8 p.m. Eastern, and you get the golden key that opens all the private channels in Telegram. One of those private channels is the members only workshop channel. So every Thursday night after we have our members only workshop, we upload that video into that private channel in Telegram. So when you become a passport holder, you'll have access to hundreds of previous weekly workshops. Do you need to watch them all? No. You can. It's a great resource because Valerie will put some commentary on each video that kind of covers with a broad stroke the different things we discussed in that particular workshop. So you can, once you have access, you can always scroll through and say, oh wow, I'd like to learn more about that. Just click on the video and then fast forward till you get to that part. Okay. All right, everything a trader needs, all under one roof, one low price. It's really a good deal. I know. I checked. Let's wrap this up with our good word for the day. Now, we had a powerful Monday, had a powerful Sunday night, a powerful Monday. If there was ever a stage set for Turnaround Tuesday, could be tomorrow. We'll see. All right, good word for the day. Only Jesus can satisfy your soul. Jeremiah 2:13. They have dug broken cisterns that cannot hold water. We are desirous by nature. We keep desiring things just like we keep taking our next breath. The trouble is, when we get the things we crave, they don't bring us the happiness we yearn for. So we keep looking for more and more things. Online shops are in the business of creating need. Things we had assigned to our want category are switched to our need category. But according to a theologian, here is the problem. We cannot get enough of what we do not need. No matter how much we have, we remain not enough people. For not enough people, there exists no lasting soul satisfaction. I saw an ad that featured the tagline, "Yesterday I didn't know it existed. Today I can't live without it." It's called the myth of more. The myth that one day more will actually be enough. If we believe this myth, we spend our lives looking for the next thing. Might be a car, or a promotion, or the love of a beautiful woman or a handsome man. It might be, depending on your age, the latest iPhone or a Lamborghini or a full body makeover. We keep hoping that the next thing will be it, the source of true satisfaction for our souls. For a few minutes or perhaps days, we experience true soul satisfaction. And then it wears off. It always wears off. I'll never forget my first Mercedes. Man, I just knew that if the bank approved me to go into debt. I think that was the last time I ever financed a car. And I was young, man. I was like, 23, 24. I just knew that if I could become the owner of that car, my life would be complete, perfect. And you know what? The first couple days was pretty awesome. I was living in Portland, Oregon. I drove it to the beach, drove it back to Portland. Man, I was somebody. And then one morning, less than a week, I woke up and it dawned on me that I had gone into incredible debt to purchase something with 4 wheels that would take me from point A to point B to point C, back to point A. A few days previous, I was crying with joy. A few days later, I was crying out of desperation because I had to make that payment every month. And guess what happened about 3 years later? While I was sleeping, a tow truck came and took it away. Now, we had a rule. We always parked the truck behind the Mercedes so the repo man couldn't get it. But somebody, and I'm not going to call any names, forgot to park the truck behind the Mercedes, and we woke up and no longer had a Mercedes. Things come and things go. But Jesus is forever. Please, if you don't understand anything I've said today, understand this. Only Jesus can satisfy. Everything else ultimately disappoints. God said in Jeremiah 2:13, "My people have committed 2 sins. They have forsaken me, the spring of living water, and have dug their own cisterns, broken cisterns that cannot hold water." If you're tired of living an empty life, come to Jesus. He won't disappoint you. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.